This happened several hundred years ago. A group of adventurous traders in the city of London decided to set forth in a ship for the far-off land known as India. Exotic silks, spices, gems, and treasure troves were all too alluring. The sheer volume of trade made the business hugely profitable. A fascinating account of the evolution of world trade is to be found in the book titled How Trade Shaped the World by William Bernstein. With such dreams in their sights, this group of traders needed to fund their adventure, hire men, run the risk of perils of the sea, pirates, and acts of God, to go all the way to India and come back, running those same risks. If you did this successfully, the rewards were rich, indeed. But where to get the money, that too, for such a risky venture? The adventurers sat at the local coffee shop, talking about such grandiose plans, and around the table told them of a rich man he knew who might be interested in this proposition. So off they went to see the rich man. They told him of the great opportunity and how anyone investing in this venture would reap huge rewards. The rich man heard them out and asked how he would benefit from the venture. "Well, sir, when we get back, we will report to you on how much profits we made. Since you fund the venture, you own a large part of it. We own the other part of it for actually traveling and doing all the hard work." The rich man wanted to know when he would get his original amount back. "We will write it on a parchment that you own this enterprise to the extent of the money you give us. You can always sell that certificate of ownership. In fact, we expect our venture to do so well that you can sell the certificate for far more than what you paid." "All of this sounds perfect," said the rich man. "In fact, too good to be true. When I, the richest man in London, find it so difficult to buy into this, how can I be certain of finding someone else to buy from me?" To this the friend said, "Sir, if there is none else willing to buy, I will buy from you." And the friend added that if none else were willing to sell on a given day, then he would sell. Let us see where each part of the story fits what we know of capital markets today. The money required for the venture is, of course, the term known as capital. The adventurers are promoters, or founders. The entity of which they promised ownership is now known as the company. The friend who took them to see the rich man is the investment banker. The company is the issuer of shares. The rich man is the subscriber, or investor. That certificate is, of course, the equity share. What you see on the screen is one of the first shares ever issued. That one was issued by the Dutch East India Company. That place where the shares can be traded is the stock exchange. The London Stock Exchange is the oldest of them. The promise by the investment banker to buy or sell, regardless of liquidity in the market, is now known as market making. The innovation set the tone for great economic growth. It happened within a few years of the development of insurance and of money markets. Remarkably, these markets also developed within a few kilometers of each other in the city of London.